56, run through one of these here. Determine the retirement savings credit. So now we're shifting gears to the retirement savings contributions credit. And you'll recall there is an income threshold exemption amount. So there's a phase out amount. So we're going to have an example here where we're going to have part of this savings contributions credit phased out. All right, so let's look at the first one. Part A, we have a married couple filing jointly with a modified AGI of $37,500 and an IRA contribution of $1,600. So I just entered the data they gave us. I changed the $1,600 to $1,700 for my calculation. Kept everything else the same. Applicable percentage is listed in the table in the text. And so the retirement savings credit in this case is going to be the IRA contributions of $1,700, and we'll multiply that by the 20%. And that's pretty straightforward, right? $340 in this case. Okay, let's jump down then to a situation where we have let's see, single 33,000. Let's take a look at part D here. So jumping down to D, a single taxpayer with modified AGI of $12,000, an IRA contribution of $2,300. I didn't alter the data in this one, but it's pretty straightforward. Since again, when you have low incomes, you're not going to obviously see a phase out. So IRA contributions 23, maximum allowed is 2,000. So in this case, they're going to get 50% of the maximum allowed. Right? So even though they contributed $2,300 to their IRA, we can only apply this 50% against the maximum contribution allowed, which is 2,000. So they'll get half of this as a credit. That's nice. They contributed $2,300, and the government will subsidize or pay $1,000 of that by giving them $1,000 back or a credit. Over to number 57. This relates to the adoption credit, and the adoption credit has a maximum of, for 2017, of $13,570. Well, we have in part A, we have, look at here and see. Yeah, we have, I did change the amount of modified AGI to 220,000. They have theirs listed in part B, part B as 210,000. So I wanted to demonstrate part B because of the amount of income. All right, so the amount of adoption related expenses is $14,500, as we said. There's the maximum limit for everybody. Amount of employer provided benefits of $3,000. So we're going to have to net out this $3,000 from the $14,500 that they paid out of pocket. And then the calculation, then we're going to take the minimum of the adoption related expenses of paid of $14,500 minus the amount the employer reimbursed, and that's $11,500, and we're going to compare that to the $13,570, and from that we'll deduct the amount of employer provided adoption benefits of $3,000, and that's a minimum amount. That's amount of $10,570, and so we'll take that amount's less, of course. So we'll take that amount listed here as a tentative amount of adoption credit that may be claimed. Now the amount of the actual adoption credit that can be claimed, here we're going to have to take a look, and we're going to look at to see whether or not the phase out applies. And obviously, since it's a lower amount than $10,570, it does. Their income is going to require a partial phase out. And how we calculate the phase out is similar to all the other phase outs. We're going to start with a tentative amount of 10,570 and multiply that by this ratio of the maximum of 243,540 minus the modified AGI of 220, and then divide that by the phase-out range of 40,000. And that this ratio here, as we said last time in a similar example, is applied against the amount, the base amount that they're initially eligible for, and they're going to lose some of the credit, and so their adoption credit will be reduced by that ratio down to 6220 using my numbers. So here we have a phase out of that adoption credit. Finally, the earned income credit. This is problem number 58 on the bottom of page 9-52. This is the credit you might recall that is available to economically disadvantaged taxpayers. And this one is a refundable credit, so it can create a refund. We'll start with, just take a look at A a minute. We have earned income of a single person with no qualifying children. You might recall the maximum earned income credit with no kids is 510, and that's where they'll stay. Here we have earned income of a single person with 2 qualifying children. This range is given in the text and at the IRS website of 5616. Phase-out percentage is also given in the table in the text, as well as in the IRS website. And then the phase-out minimum is 18,340, also given. So the calculation for the earned income credit will be to start first of all with the maximum earned income credit and see if any of this 5616 has to be taken away by this ratio. And the ratio is calculated as the earned income credit, the earned income of 23,000, and then we'll take out the phase-out amount of 18,340, and then multiply that by the percentage of 21%, and that 21.06% times the difference between the 23,000 and the 18,340 is deducted from the maximum credit, earned income credit they'd be eligible for of 5616. Turns out then that with this phase out, they're going to get $4,635 credit of the maximum 5616 because their income was, given their number of children and the filing status, their income was above the minimum threshold amount.